So let's be real. A 6.95% interest rate feels like a wall that we just cannot climb, right? Like the bank is literally asking for your firstborn just to help you get through the door of home ownership. But here's something that's going to blow your mind, friends. Back in 1981, moms and dads in Hampton Roads were staring down 18.63% mortgage rates, and they still walked away with keys in one hand and started building generational wealth, and they never looked back. Listen, the strategies they used didn't vanish into thin air. We just forgot about them. And can I be real with you for a second? While everyone's sitting on the sidelines waiting for some miracle rate drop, I'm about to show you how that same 1981 playbook is quietly beating our 2025 Hampton Roads market. And friends, the people using it are building wealth while everybody else is just waiting and watching. Hey friends, welcome back to my channel. If you are new here, hey, I'm Sonali Hudson, and on this channel, I strive to combine faith, inspiration, and real estate to bring you the fire that encourages your heart with kingdom principles and equips you with biblical wisdom to make confident real estate moves. And today, we're diving deep into how families in 1981 beat impossible rates and how you can use their exact playbook right here in Hampton Roads, Virginia. Are you ready for this? Guys, let's go ahead and get into it. Now, what we're first going to talk about is why everyone is panicking, but they really shouldn't be. But before we jump into that 1981 wisdom, let me paint you a picture of what I'm seeing right now in our Hampton Roads market. Y'all scroll through your social media feeds, and I'm telling you, you're going to think the world is falling, that the market is crashing, and all the things. Headlines are screaming 7% interest rates equals a death sentence, and those mortgage calculators, forget about it. They are spitting out monthly payments that make people want to crawl back in their bed and hide under the covers, honey. But here's what's actually happening according to the Virginia Realtors data. In July of 2025, we had 2,492 homes that sold right here in Hampton Roads. That's actually a 5% increase from last year. The median sales price hit $368,778, and yes, that's up 4% from last year. But friends, prices are still going up because the military bases never stop hiring, the Port of Virginia keeps growing, and our hospitals are always bringing in new families. Now, RAIN, or the Real Estate Information Network, which is our MLS, it shows we have 4,321 properties available for sale right now, and homes are staying on the market for an average of about 30 days. And you know what that means? You actually have time to breathe if you're a buyer. You have time to pray about it, time to find the right house without the crazy pressure that we had when we were in the middle of the pandemic. But here's what breaks my heart, friends. Fear is actually keeping qualified buyers on the sidewalk while opportunity is knocking on the door. See, everyone's in the comment section saying, oh, I'm just going to wait until the rates drop. But honey, they are missing the bigger picture. And that's what we're going to talk about today. So let me take y'all for a trip down memory lane back to 1981 and show you exactly how families built wealth when rates hit that historic peak of 18.63%. Now, the Federal Reserve data shows that that was the highest mortgage rates had ever been. And guess what? People were still buying houses and creating legacies for their children, so we really have no excuse. Let's talk strategy here. Strategy number one is to marry the house and date the rate. Listen to this wisdom, friends. Back in 1981, nobody was refinancing on day one because there wasn't anywhere to refinance to. Rates were already at the peak, so they bought what they could afford at 18% and they stayed put. But here's the genius part. Every extra payment they made was like taking a sledgehammer to the principal balance. Why? Because when you're paying 18% interest, those early amortization years are brutal for the lender, not for you. Every dollar over the minimum payment goes straight to the principal. So a family that bought a $60,000 house in Norfolk in 1981 made just one extra payment a year. They knocked off 7 years off of their mortgage, and they could have saved over $200,000 in interest. Here's strategy number two. Get creative with seller concessions. Y'all, 1981 had more creative financing than a tax lawyer's playbook, okay? Seller-funded buydowns, assumable VA loans, wraparound mortgages. If a seller wanted out of their house, they sweetened those first 2 years of payments so the buyers could stomach the initial shock. Does that sound familiar? Well, it should, because the same thing is happening right here in Hampton Roads right now. I'm seeing 6 out of 10 listings offering at least $7,500 in seller concessions. Builders are paying for 2-1 buydowns left and right. They're offering builder incentives, and the tools are there, friends. We just need to use them. Strategy number 3, buy under your maximum. This one's crucial, and it's something I preach to every single one of my clients. Banks in 1981 were more conservative with their lending, so families naturally shopped 15% below their approved limit. Now that gap covered property taxes, insurance spikes, and life happening like the baby who showed up 2 years later or the job change that nobody saw coming. Now strategy number 4. Hold on to the house longer than what feels comfortable. Here's where it gets really powerful. Rate cycles typically run 7 to 10 years. The families who signed at 18% in 1981 got to refinance to 12% a few years later, and then 9%, then to 6%. Each rate drop was like getting free money without having to pack a single box or a moving truck, okay? That $60,000 house I mentioned, well, by 2006, it was worth $400,000 without them lifting a finger. They just held on to the house and let time and rate cycles work in their favor. Does that make sense? Now, friends, before I show you how to use the 1981 playbook today, there's another piece of history that we need to talk about. And this one really gets to my heart because it shows us just how precious the opportunity to build wealth through home ownership really is. See, right here in Norfolk before 1914, many neighborhoods were actually integrated. Black and white families lived side by side in what was called a keyboard of homes. Can you imagine that? Families from all backgrounds living together, all with the same opportunity to buy homes and build generational wealth. But then racism and discrimination took over. In 1914, the Norfolk City Council passed a racial segregation ordinance that created white blocks and black blocks, making it illegal for people to live in areas not designated for their race. And that was just the beginning, my friends. In 1940, the federal government made it even worse with something called redlining. And I'm sure you guys have heard me talk about that before. According to research from the University of Richmond's Mapping Inequality Project, they created residential security maps that graded neighborhoods based on who lived there. Any neighborhood with a significant black population got marked with a red D grade, and that's where the term redlining came from. And you know what that D grade meant? It meant that those families couldn't get credit. They were systematically locked out of the very thing that builds generational wealth: home ownership. While some families were complaining about 18% rates in 1981, other families had completely been denied the right to buy homes for decades. And y'all, I could get emotional because this really breaks my heart, because those policies didn't just affect one generation. The wealth gap that we still see today in home ownership rates, it's a direct result of those discriminatory practices that prevented families from building equity and passing it down to their own children. So when I see qualified buyers today, regardless of their background, letting fear of a 6.95% interest rate keep them from home ownership, I want to shake you gently and remind you that you have an opportunity that was systematically denied to others. Don't waste it waiting for the perfect conditions that may never come. See, those 1981 families who built wealth at 18% rates, they understood that the opportunity to own a home and build equity is a gift that shouldn't be taken for granted. And friends, that's exactly the mindset that we need to have today. Now, let me bring this home to our current Hampton Roads market, because friends, the same math still works. It's just got different numbers in front of it. See, our median home price is again $368,778 according to the latest data. At our current rate of 6.95%, that's a monthly payment of about $1,953 with principal and interest with 20% down. Now, I know that sounds like a lot compared to rent, but hang with me because I'm about to show you why that's actually your wealth building vehicle, the 2-1 buy down magic. Now, remember how I said 1981 buyers used seller concessions? Well, listen, a 2-1 buy down can knock down your first rate down to near 5%. And guess what? Sellers are paying for these all over Virginia Beach, Chesapeake, and all over Hampton Roads. That means your first year payment drops to about $1,650, and suddenly that doesn't look so scary compared to the $1,500 that you're probably paying in rent right now, right? So if you qualify for that $370,000 median home, smart money says that you should be looking at houses around $315,000. Our region's price to income ratio are still reasonable compared to other markets. Suffolk sits at 4.8 times income, Virginia Beach at 5.4 times, and Norfolk at 5.5 times. Compare that to Northern Virginia, where you're looking at ratios over 6 times the income, and you'll see why this strategy still has room to breathe. So here's something that makes Hampton Roads special. According to our demographic data, 28.5% of our workforce is military and defense. An E6 gets $2,250 a month of BAH, and an O4 gets over $2,500. Friends, that's serious buying power that you're wasting if you're stuck paying rent. But here's the kicker. VA loans are assumable loans. That means if rates go up in the future, someone can literally take over your 6.95% mortgage. Your house becomes the affordable option on the street. And that's the modern version of those 1981 wraparound mortgages. Are y'all with me on this? See, with 4,321 active listings and homes sitting for 30 days on average, you have time to be strategic. Back in 21 and 2022, people were writing offers in parking lots and waiving inspections and giving their children away. Now you can grab brunch between showings and actually think through your decision. And that's a luxury that buyers honestly have not had in years. So can I be totally honest with you guys about what waiting is really costing you? Because these numbers are going to set you free from the fear of that monthly payment because of those interest rates. Now, let's say you're renting a 3-bedroom place for $1,500 a month, which is pretty typical here in Hampton Roads. And honestly, I've seen 3 bedrooms as much as $3,500. But anyway, after 5 years, you've handed your landlord $90,000, and what do you own? A stack of rent receipts and maybe some memories? So let's look at buying that median income house at around $370,000 at 6.95% for 30 years. Yes, your payment's gonna be about $2,000, so that extra $450 is gonna sting at first. But listen to what happens by year 5 or month 60. See, you've already knocked out over $22,000 off of the principal balance. That's $22,000 of equity that you own, money that's working for you instead of working against you. And at a modest 2% annual appreciation rate, and friends, we're at about 4% interest rate right now in Hampton Roads, that house is worth $407,000, and that's another $38,000 on paper. Your forced savings tally after 5 years, $60,000 in wealth building. The renter still stuck at zero. See, remember those 1981 families laughed all the way to the bank when the rates fell and their equity exploded? The only difference is the price tags are bigger today, which means that wealth building is bigger too. You know what, friends? Every single day, people just like you reach out to me because they want to understand how to make smart real estate moves in Hampton Roads. And I absolutely love providing them with the information that they need to build wealth like families did back in 1981. That's exactly why I've created several comprehensive home buyer guides that break down every single strategy that I'm talking about today. And guess what, friends? They are completely free. These guides have everything. I'm talking the 1981 playbook updated for 2025. Neighborhood breakdowns, financing strategies, and all the insider knowledge that you need to win in real estate. All you have to do is click the link in the description or scan the QR code that's going to pop up on your screen right now, and I'll send those incredible resources right on over to you. Okay, friends, let's get into it. Let me give you the exact steps to run this 1981 playbook in our 2025 Hampton Roads market. Are you ready for this? Listen, I'm excited to share this with you. First of all, I sound like a broken record, but step 1, get pre-approved through the right lender. Not all lenders are created equal, especially when you're trying to use creative strategies. You need someone who knows our local programs. Several of my lender partners still hand out grants all over Hampton Roads for first-time buyers in Norfolk, Portsmouth, Chesapeake, Suffolk, all the places. That's real money that reduces what you need to bring to closing, okay? Step 2, we're gonna make seller concessions non-negotiable. This is where having the right realtor makes all the difference. Ask for that 2-1 buy down or closing cost credits up front. Don't be shy about it, because I'm not gonna be shy about it when you work with me. Sellers are expecting these requests right now, and I'm seeing this work 6 out of 10 contracts, so it's not some crazy pipe dream, okay? Now, step 3, I want you to target the right neighborhoods. Look for areas with solid fundamentals and room for growth. Ocean View in Norfolk still has homes around $330,000 with new breweries and businesses popping up everywhere. Western Branch in Chesapeake gives you top-rated schools without the Great Bridge price tag. And these are the areas where that 1981 strategy of buying under your max while positioning for appreciation is really going to work. Now, step 4, set your refinance reminder, okay? Here's something most people forget. Set a phone reminder for month 24. That's when most buy downs expire and the earliest you can refinance without penalties. When rates drop, you win big. Rates stay flat, you're still out saving every renter on the planet. Now, you know what I love about scripture? It always brings clarity when the world seems confusing. Proverbs 27:1 tells us, do not boast about tomorrow, for you do not know what a day may bring. We can't control what the Federal Reserve is going to do with interest rates, but we can control the decisions that we make today, my friends. Those 1981 families families weren't geniuses. They just refused to let a number on a page control their life choices. And I cannot drive that fact home to you guys today. They understood that God blesses the work of our hands and the wise stewardship of our resources. Ecclesiastes 3 reminds us that there's a time for everything under the sun, a time to plant and a time to harvest. And friends, this might be your planting season, not because your conditions are perfect, but because waiting for perfect conditions often means missing the harvest entirely. Hampton Roads in 2025 gives you more tools than those 1981 buyers ever had. Assumable loans, grant money, actual inventory to choose from, and an economy anchored by military installations and a port that can't be moved to landlocked states. Our fundamentals here are rock solid. See, fear wants you to focus on what you can't control, like interest rates set by people in Washington, D.C. But faith says focus on what you can control, which is your preparation, your decisions, and your family's future. So friends, let me tell you about a military couple that I worked with. They were paying $2,200 a month for a rental in Virginia Beach, and they kept telling me that they were waiting for rates to come down. Y'all, if I had $1 for every time they said that to me. But anyway, we sat down with their numbers and I showed them how they could buy a beautiful 4-bedroom home for almost the same exact monthly payment using a 2-1 buy down that the seller actually paid for. See the difference? Now they're building equity every month instead of just paying bills. Guys, it's a game changer for them. Their BAH covers the payment, they're getting tax deductions, and their kids have their own rooms and a backyard, and that's what they wanted more than anything. So when they get orders to move in a few years, they'll have a rental property generating income instead of just memories, or they can sell it and cash out on the equity. See, that's the power of running the 1981 playbook in 2025. You're building wealth while everyone else is just making excuses. Friends, can I share something that's going to free you from fear? High rates aren't a prison sentence. They're a tax on procrastination. If the payment works for your budget today, then the opportunity works. Period. The 1981 buyers weren't special. They just refused to let fear make their financial decisions. They understood something that we've forgotten, that you don't time the market, you time your life. When you're financially ready and you find the right house, that's when you buy. Your job is the same 4-step dance those 1981 families did. Lock in the house, negotiate the sweeteners, buy modestly under your max, and hold long enough for rate cycles to become your tailwind instead of your headwind. See, history has a funny way of rewarding the people who act when others are paralyzed by fear. While everyone else is scrolling through doom and gloom headlines, you could be booking showings this weekend and running a playbook that's been creating millionaires for over 40 years. Friends, tell me this. After hearing about how families built wealth at 18.63% rates in 1981, are you still worried about paying a 6.95% interest rate? Or is there another concern holding you back from home ownership? Drop it in the comments below because I'd love to address your specific situation in one of my future videos. Friends, thank you so much for watching my channel. Your support absolutely means the world to me. I love helping people relocate to and from the Hampton Roads area, but even if you don't need a realtor in Hampton Roads, I've still got your back. I have amazing relationships, and when I tell you I work with some of the best agents nationwide, we will work together to make sure that you have an amazing experience, no matter where you're moving to or where you're moving from. All you have to do is get in touch, friends. So if you want to work with me, you can text me at 757-837-0096. You can DM me. You can drop a comment below. If you want to work with me, listen, I've got your back. Don't forget, I drop new videos every Thursday and Sunday at 6 p.m. and daily shorts to keep you winning in real estate. Friends, I love sharing this information with you about interest rates and giving you a history lesson about where things have gone over the years. I know these numbers sound scary, but I want to really bless you and encourage you that if God's telling you that now's the time for you to buy or sell, don't let the interest rate be a factor because there's always something that you can do. Thank you again so much for watching, friends. If this video spoke to you, if you have questions or concerns, all you have to do is comment below. I'd love to be a blessing to you. God bless you, and I'll see you in the next video.